right. Sanlam was established as a life insurance group in 1918 and has expanded its services to include short-term insurance, estate planning, loans, capital markets and all forms of asset management. Sanlam has a market cap of 78 billion rand, a price-to-earnings ratio of 14 and a dividend yield of 3.5%. Looking at Sanlam, Paul, it has always been favoured when you compare it to Old Mutual.
Yeah, so in 1918 they decided in Cape Town that they were tired of the English-speaking South Africans. The Afrikaners have got to have their own firm. So that's its roots. Look, it was built up by Marinus Darling in the 1990s. He did a great job at sort of expanding into these areas you mentioned there. They then had a few sort of wobbles, and then Johan van Zyl, the current CEO, was the rector at University of Pretoria. I don't know how that worked, but he's an excellent operator. Extremely confident, very good manager, very good at marshalling his troops. And the group's done extremely well. So since the downturn and the bad times of the earlier part of this decade, or the last decade, you know, the 2000s, they've done extremely well, all the way from like about 8 Rand at the bottom right up to the current price of about 36. So they really have been very good at executing on their game plan.
Looking at the operations in India, they've just increased their stake in Shriram, if I'm saying that correctly, to just over 26%, but with some market commentators saying that they won't be able to increase that stake even further. What are your thoughts on that, Jean-Pierre?
There have been recent changes in Indian legislation that would allow them to increase that to probably around 49 or 51%. But I do think if you look at Sanlam, it's probably how a life insurer should be, how it should be managed, which is very conservative. So they've made all the right decisions in the past. They've said no to business if it wasn't priced correctly, not selling life insurance policies at the wrong price. And only recently have they said they've built up all this excess capital. Let's use it for Shriram to increase a stake in Santam. So you can't fault management in this case.
So good.
Very well managed and looking for that growth aspiration in India now as well.
Paul?
So it's the emerging market plan. So they don't want to be, you know, going into the developed markets. They want to be doing Africa and Asia and so on and so forth. That makes sense. I mean, I was speaking to Patrice Motsepe the other day. They bought 10% of Sanlam when it was at 8 Rand. They've done spectacularly well. Everybody's done spectacularly well. We're in a marketplace where there are more and more middle income people that are needing insurance for motor vehicles, that need to buy life insurance, that need to start saving. So they're in a position to do all of this stuff. Again, though, I come back to my original point, and that is that they will do well when markets do well. And do you need that kind of pro-cyclicality in your portfolio? I don't know. That's another issue.
So hot or not, Sanlam?
No, I'm going with not hot as well.
Jean-Pierre, hot or not?
I agree with Paul. Once again, the valuation, embedded value around 33 Rand a share. So trading at a rough 10% premium to that. Too expensive for us, not hot.
So 2 not hot on Sanlam.